Hello traders. So finally, now let's start with the strategy. But before we start with the strategy, let us recall in 2 minutes what we have learned so far. So we learned two important basic concepts. So first one was about the price action, how the support resistance are getting created in the market and what happens once they get broken out, and what is the high probability and what is the time when it could actually get broken. Secondly, we'll learn about the options, what premium to buy, which expiry to choose, when to buy call, when to buy put. See, a lot of retailers are getting confused around the option part, what premium to buy. So everything is covered with this very simple technique which I taught. So in case if you have skipped it, kindly go through it. It will take hardly 10-20 minutes to go through it. But see, because it is going to help you in the lifetime part, right? So spend that 20 minutes, it's not going to cost you more. Now we'll start with the actual strategy part. So we'll see few first examples, then we also going to observe in charts as well, the real examples. So first we'll take basic examples. So the first one, okay. So you can easily see how the setup is looking. It's very easy setup, okay. And you might be wondering, it's so easy, but I never assume like this could be the such a good strategy. I'll be explaining when to enter, when to exit, the stop loss, the target, how to trail, how not to trail, how much quantities to trade with, how much capital to start. Everything will be discussed, but slowly we're covering it. Okay, don't worry about it. Now we'll be taking two examples. First, if the market breaks high and that is resistance, if the market breaks on the lower side, that is support, and then we'll be looking at the charts. So the time frame, the most important thing is the time frame. The time frame will be 1 minute time frame. Okay, so how do you put 1 minute time frame? So if you go to your broker's platform, you'll be observing Nifty, Bank Nifty, which your index you prefer to trade, and just simply go to 1 minute time frame. Like maybe it could be 1 day initially, switch it to 1 minute, and then it's good to go. So we can observe the charts. What to observe? So let's say, for example, in this case, see market goes up, right? Let it make it more, okay, this is the highest. So if you see here, market goes up, right? So this is where market comes and falls down. So we establish it is a resistance zone, right? Or you can say as a supply zone, or also you can say as the creator of, or in simple words, we can say it as a first touch. So same thing, but 4 different names. And it doesn't matter what you say it, just try to remember the concept. So we call it as a first touch. Market goes down, again market comes up. At the same point, market again get rejected. So this we call as a second touch. And also if you remember, this we call as a POI, point of interest. Why? This is where we get a confirmation that our setup or strategy is going to form and we should be ready for it. So what happens? See, market comes down and again it comes to the same resistance zone. This is the touch number 3. This is where we're going to take our trade. Okay, but how to take a trade? There is one small condition to it. As I told you, there are 2 simple rules. The first is we have to wait for the third touch. This is the first rule. And the second and the most simple rule is we have to wait for a halt candle. Now definitely what is a halt candle and why you are showing in the black color, right? So halt candle basically means it's a pause. So if directly breaking resistance, it means there is no halt candle and we are not interested in that particular setup. What we are interested in, when the market comes for the third touch, okay, third touch, fourth touch, fifth touch, doesn't matter. What we want is before breaking the resistance, market should come and take a pause. It should take a halt. Why? It is required to accumulate the buyer or seller in order to break that particular level. For resistance, buyers are required to break, and for the support, sellers are required to break that particular support. Okay. So here a halt candle is required, and it could be a green candle, it could be red candle. For that purpose, I have shown in a black color. For example, if you see this is a halt candle, even this small green candle, if you see here, this is also a halt candle. Why? Because after touching the third time, after this candle touching the third touch, basically creating a third touch, what we saw, the next 2 candles were not able to break the high, right? The high of this particular green candle. So therefore, we called it as a halt candle. Okay, so halt candle is quite required in order to take the trade. At least 1 halt candle is required. If you get multiple, that is good. And it could be a green, it could be red. For example, okay, if you see, this is the touch. After that, the green candle forms. After that, the red candle forms. So both these are a halt candle. But we are not taking trade here because this is the first touch. We'll be taking at the third touch. If in case after third touch, instead of breaking here, market again comes down and comes again. So that will be fourth touch. Again, same thing. We know what is the halt candle, what is the high, and according we'll be trading. So what we have to do, again simplifying it more, 1 minute time frame, wait for the second touch, so you'll get an indication, okay, that the setup could form. What we want, the first rule, that market should come and make a third touch on the resistance zone, and after that it should be followed by a one halt candle. So two simple rules, wait for the third touch to get created and then wait for the halt. Only two simple things. Once the halt gets created, what we have to do, see, this will be a spot chart or maybe a future chart of Nifty or Bank Nifty, right? A spot chart or future chart of Nifty, Bank Nifty, but we are not going to trade in spot because it's not possible, and also we're not going to trade in futures because that is not where we're going to scalp. We're going to scalp in options. So what we're going to do, we're going to open a call option of premium somewhere near 300. I already explained the reason, right? So we're going to mark what is the high of this particular candle, the third touch candle. Okay, so let us say, for example, the premium was 312, is the high created by this green candle on the option chart. After that, for 1 minute, market takes a halt because it's a 1 minute time frame. So what we know, 312 is the high. So we'll put an SL order, stop loss order. So those who don't know, I'm going to explain that as well, so don't worry about it. But I'll just tell here simply as well. See, the trigger and the price are the two things which we have to fill while putting in a stop loss order. So the trigger price will be 312 and the price will be 313, just 1 rupee above it. Why? Because the options has good liquidity and it's very easy to take a trade over there. So what we want, one simple halt, and that is sufficient. So this is the order which we're going to place in the system on your broker's terminal. So what will happen after 2 minutes in this particular case, on this particular candle, this green candle comes and break the high. So here you will be getting an entry. Now how much target and stop loss? Don't worry about it. We'll discuss. Okay, there is no hurry. Spend 5 to 10 minutes. Bear me for a little bit more time, and you're good to go. But try to understand what I'm telling here. It doesn't matter how much market is going to halt. Only it should not halt like more than 1 hour or 2 hours, because in that case a premium decay will happen, and in that case the option entry price will change. But if it's coming in like let's say 5 or 10 minutes, it is okay. We can simply take a trade here. So you understood how we're going to trade. We just want a third touch, a halt candle, mark the high of the third touch candle, the green candle, and we are good to go. We'll be taking the entry. Now this is case where the resistance got broke. Let us take an example where we see a support getting broken. Okay, so sorry, we should open in Paint. Just a second. Okay. So this is a case where support is getting broken, right? So what happened? First the market falls, then market goes up. So this is where we know the support is getting created. Okay, or you can simply say first touch or the demand zone. Now what happened? Market again comes down and again bounces up. This is our second touch, which we call as a POI, point of interest. This is place where we know something or set up a strategy can be formed and we should be ready, right? After that, what we want is to just wait for the third touch to form. So what happened? Market comes and falls here. So this red candle, right? Just a second. Yeah, this red candle is the third touch candle. So what are two rules? First, wait for the third touch candle to form, and second is there should be at least one halt candle. So if you see, this is a black color. Again, it could be a green, it could be red. Technically here it should be green, but just try to understand what I'm trying. It could be green, it could be red. Don't worry about it. Okay, it should be halt. That's it. So let's assume here we're going to buy put because market is falling down, and let's assume 320 was the high of this red candle, that put option which we are observing. The premium went to 320. So what we'll put in trigger, we'll put 320 as our entry price, and in the price section we're going to put 321. After we see this halt candle getting formed, okay, don't be in hurry. Just you see market going up, then again this candle can come and fall down. Wait for this candle to close. It's just a matter of 1 minute. Wait for that candle to form. Once that candle is formed, just simply be ready with the order book and simply let it go in the system. If the market falls, it will take you entry, and if it could be a profit, it could be loss, that you completely let it go on the market. Market will decide what to do because it is supreme. Okay, so same thing here, we're waiting for the support to get broken down. Now we'll see some sort of live examples in the actual charts. Okay, so let's open the first one. Okay, we'll open directly. Okay, now if you see here, this is the live example of Bank Nifty. Doesn't matter which day or date it is. What we have to see here is the time frame, right? It is 1 minute time frame, so it's quite clear now. Okay, so what we see here, so first touch, then the market created the second touch, then the market created the third touch, and there is one halt candle, right? This red candle what is called as a halt candle. So we know what is the high, what is the low. So if market breaks this high, we'll get the entry. So here it didn't break. At this particular candle, we got the break and we got the move, right? Now we'll take the next example. So first we'll take all examples when the support resistance was getting broken, and then we'll take few examples when the resistance support was getting broken. Okay, just a second. Yeah, next example. So if you see here, this is the first touch, right? The second touch, this is the third touch. Now this red candle, I'll try to mark it. See, this red candle is the halt candle, and this is what we want. So what happens after the halt? Market did come and break. Market again went down and then again came up. Doesn't matter. If the high gets broken, we'll take the entry. What happened? Now the market comes for the fourth time. This is the fourth touch, right? But did the market break the high? I'll just remove the drawings. See, this is the high, if I can mark it, and this is the high of the fourth touch. So market didn't break. So technically your entry is not going to happen there. When your entry will trigger, your entry will trigger at this particular candle. Sorry, brush. Okay. So this is the candle where your entry will get triggered, right? So nothing to worry. If you're following your system, market will either give profit or loss. Only thing is just stay patient with the setup, wait for it to form and just put the trade and follow your risk management. Do not alter or change it, because I have tried and tested a lot of things and then I finally created the setup. So don't worry about it. Simply put the trade and wait for it. Now let us go to one more example. We'll see few more examples. See, this is the one more example. See, as I told you, first we will be checking all the resistance and then we'll be taking all examples of the support. So the first touch, sorry, the second touch, this is the third touch, right? So market came for the third touch. This is the halt candle, a small green candle. And then what happens? As soon as this high is breaking, we get the buying opportunity and we see a good move. Now you might be seeing that market move 100 points, 200 points or whatever. Don't worry about it. See, no one knows how much points it can go on the high side. Currently we are focusing on the small points and we're trying to get the good quantities. This is what is our focus is. We are trying to get 1:1 risk to reward, then 1:2, 1:3. Everything we will try to get. Don't focus on 100 and 200 points. Start with one step at first. Try to take small profits, and eventually these small profits is going to make a big difference. I've showed you already, right? I showed you the results. So don't worry about it. Okay. So this is one more example. Again, we'll take one more example, right? So we'll go to brush. So if you see here, the first touch. Okay, just a second. Yeah. The first touch, the second touch, then the third touch. Now what happens after the third touch? There is a lot of time spent. Doesn't matter, right? You know what was the high created here. So just wait for that high to get created and then put the order. So at the fourth touch, what happened? Market came, took a halt and break. So that's good. See, on the fourth touch, if you're getting a halt, like here in this case, at the fourth touch you're getting a halt. This is the halt candle, right? Definitely, because when the market came near resistance, it took a halt. You can take an entry here as well. Okay, it doesn't make any difference because this and this will be hardly 1 rupee in an option chart. Don't worry about it. You can take trade here as well because there is a halt. If you go directly, then this should be your entry price as per the third touch. But if in case at the fourth touch or fifth touch, like here in this case, this is the fourth touch, and if you get a halt, you can put your trade after the halt. Don't worry about it. Okay, and so okay, there is one more example. Now if you see here, yeah, this is a good example. What happens? First touch, then the market creates second touch, then the market creates third touch, and this is the halt. Alright, what happens? Market goes down, again comes, but the high is still not broken, so you won't be getting entry on the option chart. What happens after that? The market falls sharply. So now instead of putting your entry here, you can take your entry at the high of the fourth touch. This is how we're trying to improvise. Why we're trying to change the entry? See, it will be moving by hardly 1 rupee, 1 or 2 rupees max. Why we're trying to move? Because there is something called as a premium decay. The option price will keep going down and down because of the time decay, and it will be very less in Friday, Monday, Tuesday. but it will be quite good or aggressive on the Wednesdays and Thursdays. So in that case, the option entry might change a bit. So for that case, if the market makes multiple halts, we'll try to adjust the entry price as well. It will be moving back 1 or 2 rupees. Maybe on Thursday it might move at 3 to 4 rupees as well. So in that case, we don't want our entry 4 rupees late. So therefore, if we get a halt, see, I'm again repeating, if we are getting a halt, in that case only we'll be changing the entry price, or else we won't. Now let us take few examples of when the market breaks the support zone. So here also, if you can see, this is the first touch, right? So market made a first touch over here, then the second touch over here, then the third touch over here. And what happens after the third touch? We see a halt candle, a green candle, right? So this is a green candle which is acting as a halt candle. What will happen? Now if the market comes and break, we'll be taking a trade. But does the market break? No, the market didn't break here, right? So what we saw here is market again went up and made a fourth touch. But the interesting part is, after making a fourth touch, see, this fourth touch didn't break the low of this particular candle. So there won't be any entry there. Okay, what happened? This candle created a touch, that is a fourth touch on the support part. Then it made a small halt. Halt candle could be green, could be red, as I already explained you. As soon as the halt is created, now this is the area where we want our entry. So what we'll do, we'll be opening a put option somewhere price range from 280 to 320 rupees. And let's say if the put option created an high. See, if market is falling, the put is going to go up, right? So it will create a high. Let's suppose it created a high of 301. So what will put our entry? 301, 302. And if the market comes and falls, it will give you the entry, and rest, let it go to the market. It might give you the good profit, it might give you a small profit, it might give you a big profit. I'll tell you when to book, when not to book, what to stop loss to keep. Currently just focus on the setup. I'm taking a lot of examples just to make, see, these are all live examples of Bank Nifty, so there is nothing edited. This is all actual charts. Okay, secondly, the time. See what happened, this is 28th of some month. The market created the touch in the morning, maybe 9:15, not 9:15, maybe 9:20, 9:30. This is the support which market created. Then the market went quite up. See, if you this is 37,800 and market moved more than 30. See, it's not even coming in chart. So more than 400, 500 points market went up, but again it fall down. This created the second touch. Market went little bit up, again fall down. Now this created the third touch. Let it zoom it bit so that you can see the actual. Sorry. Yeah, okay, that is sufficient. Okay, so if you see, again market went up, then again market came down. For the third touch, we see a green candle. This is a halt, right? This is what is required, a halt candle. Okay, the brush is working here. Let us see. Yeah, so this green candle is the halt candle. This is what is required. So once the halt candle gets formed, we'll see what is the high made in put options, and we'll just put our SL order there, right? Sorry. Okay, so one more example we'll try to see. So if you see here, again, this is the first touch, that is the support. Then second touch, this is also support. This is the point of interest when we know the market could fall, the setup could be created. Then the market comes, creates the third touch, and then it creates a halt. This green candle is the halt, a pause candle. And as soon as the market breaks this level, we'll take the put buy, right? So we already know where to buy, because this created some high on the put charts, and we know where to put the SL order, right? So after that, market, if it comes down, we'll get the profit. If it goes up, we might hit the stop loss, right? So one more example there. See, the support, again market comes, creates a support. This is the third touch where we're going to put the entry. Then a halt candle happens and market goes up. If market goes up, your entry won't be triggered, so don't worry. Or you will say market went up, sir, we hit the stop loss. No, it's not possible, because unless market breaks this level, we're not going to get the entry, right? So market goes up, again it comes down, and this is the point where your entry will trigger. And what happens? Market comes and falls down. It's a sharp reversal, doesn't matter. By that point, you will be getting enough profits in option. See, option is something in which there is something called as the implied volatility, IV. Then there is something called as gamma, and this all concepts actually helps you in option to move very fast when important levels are broken down or broken up. So see, again I told you, there is something called as option basics, and which I already covered. So if you want to learn, you can go and understand those concepts, which will help you more in understanding this strategy, how this strategy was built up, and maybe in future you'll be able to build your own strategy. But currently what I'm trying to tell here is don't worry about that. If the market is going up, you already made some decent profit on this particular trade, and that's for sure. Okay, now let's take one more example. Now, okay, that's a really good example. See, if you see first touch, second touch, third touch, what happened after third touch? We see a reversal candle, or you can say a halt candle. This is a halt candle, right? And I told you, it doesn't matter if it is green or red. If it is formed, our work is done, right? And then what happens? Then the next candle, this candle breaks the low, and definitely this candle gave you the profit. Now here, even if you want to book 10, 20, 30 points of profit, market is going to give you enough of the profit. So here what you have to do, you have to just be ready. And sometimes market might surprise you. Okay, so here you go, if you even if you want to try to book 10 or 20 point profit, market is going to give you 80, 90 points of profit. And this is where sometimes you might be making a bigger profits. Sorry for that disturbance. Now let us see few more examples. Okay, now this is where you don't have to take the trade. Now this examples is somewhere you don't have to take the trade. Let me check right. So this is where you don't have to take the trade, and I'll tell you what's wrong in the examples. Okay, so if you see up first touch, good, second touch, good, third touch happens, but it is quite down. It's like, see, small difference is okay because this is market little bit up and down is okay, but this is not a small difference. Okay, it's a big difference. So big difference is not allowed, because sometimes market will come here, fall down, and then directly go up. That is not okay. So that is not an halt candle. And what happened at third touch? We don't see a halt. We don't have a halt. Market directly breaks. But you'll see, sir, it actually breaks and went quite good. See, it might go sometimes, it might not go sometimes. Now, if for especially, I have choose all the examples when market really moved up. But we have to be patient. See, there is a system which we are following. We believed in system because we will be back testing it. Whatever I'm teaching now, you have to go and check on the charts. How many times it has formed, how many times it has given profit. Even because I show you already results, how I was able to make profit, how much profit I was able to generate. But still, in order to build that psychology, in order to build that mindset, you have to go on the charts and look all these examples on the charts. Nifty, Bank Nifty, doesn't matter. Just go and just search for these charts, so that you will see how the setup is working, and that will build the confidence, the gut which is required to take the trade. So here we won't be taking the trade. Again, one more example. Let us see. Yeah. So this next example: first touch, second touch, third touch. After third touch, we don't see a halt. The market came and touched. So this maybe market volatility. So we can't think of buying here. Even though the market went up, we won't be buying. Understand the point? I deliberately choose the examples when you see the market went up. So that will create that kind of greed in yourself, that why not to take the trade? We shouldn't be waiting for the halt. Market directly goes up. Definitely it might be going. But if you take multiple examples, you'll see in most of the cases, market will be first hitting your stop loss and then going up. For that reason, in order to avoid that stop loss hunting part, we are waiting for the halt candle. And I already tested it, so don't worry. What I'm trying to tell, follow it for at least 1 or 2 years, make enough of profit, and then make whatever changes you want to do in the setup. I won't be telling you anything. But if you want to see results, what I am getting, definitely try to follow it for at least few times till you make a good profit, and then you are free to do. You can do anything. Then no one is going to stop you. Get that experience first, and then you can make any changes you want. Okay, few more example. That was for the upper side. This is for the downward side. First touch, second touch, third touch, market came and broke the levels. No trade here. Don't worry. Let the market go. No matter market fall 10%. Don't get in FOMO, fear of missing out. See, I have seen the market falling 6%, 8% like during the corona. Sometime I made really good profit. Sometime I really missed the rally, and it doesn't matter, because no matter when you're taking the trade, you don't know if it's going to fall at 8 or 10%. A lot of people get emotional during this part, like market fall 1,000 points or market went up 1,000 points, and I was not able to make the profit, or I was not even getting a single entry. Doesn't matter, because one day is not going to define you. Like there is one saying, one piece of paper is not going to define my future or destiny or who I am. Exactly same, one day is not going to decide either you're going to be a trader or not. Okay, it's a process. Just go through it. Okay, now here also if you see first touch, second touch, third touch. But what happened? The fourth touch, definitely we can take a trade, because third touch we saw a halt. But why we not going to take a trade here? Because see, ample of time is gone. So here the halt is required. Why? Again the same part, option time decay. Okay, so there will be decay in the option price. So for that reason, we required a small halt over here. If in case we got a halt, we might be able to take the trade. Now moving to the maybe a last example of the false trade in which we are not going to take the trade. See, first touch, second touch, third time market came and directly break the level. So what will happen? Market broke the level. Maybe you might not get the enough points. Then the market goes reversal and then it might come down. So here you might be giving unnecessary losses. So in order to avoid that, we are waiting for that halt candle. In order to avoid all the stop loss hunting, we are waiting for that halt candle. So wait patiently for the setup to form and then only we're going to take the trade. So this is, I think I tried to explain how this setup actually forms and how we're going to take the trade. Also now let us see a few of the live examples on the chart. We'll take an example of today itself, the Nifty trade which I took, and also I'll show you on the Bank Nifty as well, doesn't worry. So if you see, first thing what we have to see is the halt. Okay, so if you see here, if I draw the line, you can see clearly here that this was the line of touch. Okay, a little bit we'll try to adjust it. Yeah, this is okay. So this is our first touch, this is our second touch, this is our third touch. Now what happened? Third touch, market came till here, and after that market showed a red candle. We'll try to zoom it a bit so that you can see it clearly. So what happened? Market came, it took a halt, and after that market crossed. So on this candle, on this big green candle, we'll be getting our entry. How or why? Because when the market came for the third time over here, it took a halt, and we know what is the high created here. So it was created, I took some, I guess 18,000, no sorry, I took 17,800 call option, somewhere like price of 325. Okay, so in Nifty as well, we'll be using the same method. In Bank Nifty, we were using the 300 rupees option. For the Nifty trade as well, we're not going to use the 100 or 200 rupees premium. We're going to use 300 rupees premium, because when I started using the strategy, initially I started using same 100 or 200 rupees premium, exactly half of the Bank Nifty, because this is how we judge. Nifty is half of the Bank Nifty. This is like normally which I assume. But what used to happen, the decay process or the premium lose used to quite happen fast in the Nifty options of 100 and 150 rupees. So what I did, now I doubled the price. I went in the money. So even for the Nifty also, we use the premium of 300 rupees, 280 rupees to 320. Anywhere in between is okay. So today when I was trading on this particular setup, somewhere like 325 or 26 was the entry price. So same here, exactly same. The quantities are same, 1,800. So here we used to buy at the same exact price. So here we took the trade and market showed a good move. The target stop loss we'll discuss. Don't worry about it. When to trade, how much stop loss to keep, everything. But here if you understand, this is the trade which we took. Now what I told you, a small difference is okay, but the big difference is never will be considered. So if you look at the levels, so this was our level, right? Let me draw it again. Right, this is our level. So what we took trade here. So this is 62, this is 63, hardly 1 rupee difference. Okay, so this is considerable. But let's say market comes here and then it falls in, you cannot take entry here. That is not okay, because market didn't even come near the resistance point. Okay. Now let us take an example of Bank Nifty as well. Okay, so in Bank Nifty also the setup was formed, and I'll tell why we were not going to trade on that particular setup. So if we try to draw a line here, okay, so this is the zone in which the Bank Nifty tried to form the line, right? So I'll try to mark that. So yeah, okay. What has happened here? See, this is the area of first touch, the second touch, right? The third touch. And what happened? At third touch, market directly tried and come to break that particular level. In this case, what will happen? You might hit the SL. And see, in the examples which I showed you, you saw the market directly went up and gave the profit. And in that case, you might be thinking, we shouldn't be waiting for a halt. We should directly take the trade, no matter what happens. This is a good example. Why? Because if you see here, what has happened? When the market came, I'll zoom it a bit so you'll get more confirmation. See what happened? Market came. Did it halt after the third touch? No. It tried to went on continuously. So market will go up, and when the market fall, you will unnecessarily hit the stop loss. And to avoid these losses, this is why I told you wait for the halt candle. Because if you don't get the halt, then it's not good. Okay. Now same thing if you took on the lower side. See, if I draw a line here, I'll just take this line on the lower side. Now if I draw it here, now this becomes good trade. Why? See, this is the first touch, the second touch, the third touch. But what happened? Did we get into third touch? No, market directly went up. Good. So if it comes here, we need a halt, because here we don't have the halt candle. what happened, if you see this red candle, right? So this was the halt candle which formed. Sorry, this is the touching candle of the fourth touch, and this red candle is the halt candle. Okay, so if I want to tell you the time, that is 12 o'clock and 44 minutes. So this became the halt candle. So you can take your trade as soon as this low gets broken. And if you see here, this was quick 20 points move. So the market will easily reward you. Only thing is you have to follow the setup. Just follow the setup and you will get your reward. Now, I hope you understood the setup, how the setup forms, and it doesn't matter whether the market is forming, either the market is forming at the high, at the low, in between, doesn't matter. Only thing is you have to wait for the halt. Only if you see the halt, you'll be taking the trade, or else you have to just simply let that trade go. I'll also show you few more examples. Maybe like yesterday also, it formed in Nifty. Where it is? Nifty or Bank Nifty it formed. Yeah, here. So if you see here over this level as well, we'll just simply use this level, right? So you can see multiple touches where the market is forming. First touch, second touch, third time the market came, and again market went up and then it fell. So this move is sufficient for you to make the profit. Don't think of capturing this entire move, okay? Because you don't know when it's going to take the U-turn, and then you won't be able to take the huge quantities as well. Also, you won't be able to manage the stop loss. So just follow this system and you will see the result. What I want you to do is go and backtest it. See how much time the exact thing has formed and how much time it has been profitable. So that will give you that initial confidence which is required to take a trade on this particular setup. Once that confidence is built up, then yes, surely you can take the trade. Also, I took a trade here as well. Okay, yeah, exactly here. Yeah, okay. So here also, if you see, if I draw the line correctly, yeah, this is the touches. Okay, and I'm just not randomly telling. Okay, I can show you the trade book as well. Okay, what is this particular day? See, this is the first touch, second touch, third touch. On third touch, we got the halt. So this will definitely show that we have to take trade here, right? So what we have to just wait for that trade to happen, right? So after that, market came down, again went up, but the premium didn't touch. One more good thing, what will happen? Again the market come, we got a halt. So now we can trail our entry here, right? So as soon as this area gets break, we want to take entry. So this is 1st of November, and the entry should be somewhere like 1 o'clock and 47 minutes. We'll go to the trade book, right? I'll show you the trade book as well. So the date was October 20 and November 20. Yeah, 1st of November. Show me from November. Which was the exact day? Again, I'm gonna see. Sorry for that. It's 1st of November. Okay, we don't need anything. Yeah, 1st of November, right? And the time is somewhere like 1 o'clock. So we'll go a little bit ahead. Yeah. Okay, this is the exact date. See, there is a trade at 1 o'clock and 47 minutes, isn't it? See, this is the exact trade. After the halt, I took the trade. So if you see here, the buying price, see, it would be 1,800 quantities, because as the month will go, my capital is increasing, so I'm increasing the quantities. So if you see here, somewhere like 260 rupees was the buying price, right? And 273, I started booking the profits. I was not looking that yes, the market is going up, let us hold it and it will give me a very multi-bagger type trade and this will double my account or triple my account. See, expectations are good, but keep some practical expectations, right? So once I see a good profit, I start trailing. After that, the market, if comes down, my trailing stop loss will hit. So this is where my trailing stop loss got hit. So 273, I book basically the profit. So even if you just randomly see how much points we gain, it was, let us assume 259. So we'll take 260 as the entry and 273.5 approximately is the exit, right? Yeah, 273.5 is the average exit. So 273.5 minus 260 as the entry price. So 13 point into 1,800 quantities, it becomes 24,300, right? So it is an, see, I'm not trying to tell you or trying to show someone down. See, from middle class family, I started with a very, very low capital of 8,000. No one will believe with that, but I started long back with 8,000 capital. Slowly I started increasing my capital once I started seeing profits in market. And now it doesn't matter to take a good risk because I got that capital, right? But 24,300 within small time. How much time did I spend for this particular trade? See, from 47.23 to 18.25. So not even as you can say 1 single minute, right? Within 1 minute, it was 24,000 of profit in the trade, and maybe somewhere like 1,000 rupees will be the brokerage for this particular trade. So take it round figure, 23,000 was the profit on this particular trade, and that is an average starting salary which people get when they go for any sort of business. Maybe he could be engineer, and or he could be from the science field, commerce field, any field, I don't know, but average. I'm not saying someone is from passing from IIT or something and then he's making few lakhs. I'm not talking about that. We're talking about the normal people like you and me, right? So market will reward you. Just have a little bit patience. Initially you will be seeing some struggle period, definitely, but now if you follow the correct system like I'm trying to show you here, if you follow it, you will see the result, and that is going to change your life. Follow it completely from top to bottom, then you'll see the results, and then you'll be thanking me for this particular setup. So I hope I cleared you the setup part, the strategy, the basics required. Now we are left with only one last part, that is the risk management, money management, position sizing, and how to trade. And we will cover in the next topic. So see you into the next topic. Till then, thank you so much for listening.